Hello and welcome to SPX Factor. On March 10, 2010, the SPX index closed at 1,145. Therefore we are up 60 points on our current position. Remember that we have placed a stop loss at 1,115. Stay tuned for more updates.
Hello, this is Adam Hewson. I'm coming to you as always from the digital studios of Market Club, and the market we're looking at today is a familiar market to many Market Club members, and that is gold. There's the symbol, and it's a daily chart of spot gold. This is a candlestick chart, and as you can see, we made our highs. This is back here on December 2nd, and the highs that we looked at there we're somewhere in the region of around $1,221 before the market had a big plunge. Now, we said earlier in our February 17th video that we shot that we thought gold was going to be in a trading range, and I think that's pretty much what we're going to be seeing for a while here. I don't think we're going to see an upside move to much higher levels, certainly not taking out these levels anytime soon. You see, I think gold has to make these energy fields to push it higher. And I don't think we've made this energy field, completed this energy field just yet. Today we put on our blog, we had a sell signal today, and we saw gold close at its lowest point of the day, 120.72, down about $13 or $14 for the day, and at its lowest close since we started this month. So I think about lowest close in about 5 days. So I think we may see more two-way action and possibly see some more weakness, but we are still in a trading range. And let me just take everything off the screen and let's take a look at some of the other energy fields we've talked about before in the past. So let's just scope this out, which is easy to do with market. And the big energy field we talked about before, which we outlined very carefully in our video of February 17th, was this one right here. This is the huge energy field. And this took 19 months to complete. So it was a long time before the market made new high. So the market then shot up very dramatically and then it's come down. I think we're going to see an energy field similar to this that could take several months, even a year or more, to completely map itself out to go higher in 2011. So that's what we're looking for in the gold market. Now, that's not to say we won't see some opportunities trading ranges, because these are some nice moves that we're seeing right here. But I think the easy money, which was right here, is over with for the time being in gold. I think it's going to be a very interesting market in the next several years. Certainly, it bears a lot of watching. It doesn't matter if you are a trader or not a trader or an investor or whatever. You've got to pay attention to gold because it's a big market. So let's just take everything off the screen and we'll look at another indicator that we've talked about before. And let's just go from there. So okay, so what we're looking at here, and this is not quite a divergence, but you can see how this area here, the market's coming down. Let me give you a better idea with the pen. You can see how this area is coming down like that, and we've got prices going up like that. That's usually not a good sign. I think today we had a signal, as I said, and we'll look at that signal very carefully, and it will show you some other effects in the gold market. So let's just go put our trade triangles in. That's our weekly trade triangles. You can see right here at $1,124.61. It's right here. I'm going to put that over here. And then you can see our daily at 125.60, which, as I said, we alerted you on our blog about that this morning. Market closing at 121.52. We're doing this live. The market's still open. But again, you've got something, if you're going to be trading with our program, our trade triangles, you've got something very important right here. And that's a conflict. We didn't say go short gold, we just said to be out of gold. Now, we would have had a buy signal earlier on in gold. It would have been a very small profit, hardly worth talking about. But the reality is you've got a conflict between these weeklies and the dailies, which means you move to the sidelines. You're in a cash position. Now, the longer term trend right here, which is the monthly trade triangle, is still long from 929.50, and that trend continues right now. Now, the key level to watch in gold, and this is going to be for some time to come, is this level right around here, right around the 1,050 level. Now, if gold was to go below that level, which I don't think it will do, it would signal a major change in this direction here. So we'd be looking for a trend down at that point in time. But right now, I think we're in a broad trading range, and I think we're probably going to test somewhere along these levels here towards the lower end, maybe $1,100 an ounce, something like that, before we just sort of tick up again. But I would not surprise to see some sort of rhythm like that in the marketplace before this is all over. Hey, this is Adam Hewison. We're looking at gold. You should be out of gold if you're following our short-term trading triangles. If you're a long-term trader, you're going to stay long, and that's how we look at things. Adam Hewison for Market Club.